During the Daily Journal's annual conference, Charlie Munger lamented the widespread stock market speculation, compared cryptocurrencies to STDs, and warned the Federal Reserve's lax monetary policies would result in catastrophe. The 98-year-old billionaire is most recognized for serving as Berkshire Hathaway's vice chairman and partner in business with Warren Buffett. He praised Costco, defended his bets on China, and raised the alarm about the surge in passive investing at the event, which was broadcast live on Yahoo Finance. According to renowned investor Charlie Munger, successful investment involves a delicate balance and an odd mix of anger and patience. However, he claims that most investors today are unable to maintain this delicate balance and, as a result, frequently make poor financial judgments. According to Munger, good investing necessitates having a profound sense of one's own knowledge and ignorance. The key to every profitable investment is to try to buy something that is worth more than you are paying for it. Successful investing entails doing just that. In a virtual interview conducted by the California Institute of Technology, whose footage is presently on YouTube, he said, "There are a lot of different methods to locate something worth more than what you're spending." Munger claims that a lot has changed since he started his investing profession because there were very few people interested in it and people were not as intelligent back then. "When I was young, there was practically nobody involved in investing, and they weren't very smart. Now, almost everybody is smart. A good proportion of people in investing are sucked into finance by the money. That's an important development. I don't welcome it at all," he said. Munger claims that all the genuinely wonderful things when he was young have greatly diminished. He thinks the long-term investment environment is really interesting since some new things have emerged and other old ones are already starting to die. The investment industry has seen a flurry of activity and today's investors are competitive with one another. "I don't think it's a good idea for everyone to be trying to outsmart everyone else in order to get rich, but that is what has taken place. There have been speculative frenzies and other things. Although it hasn't all been good, it has been very interesting," he said. According to Munger, market returns over the next 10 years are predicted to be lower than they were in the preceding 10 because of this hysteria. "There are so many individuals involved, the frenzy is so intense, and the incentive structures are so absurd. I predict a decrease in returns," he says. He claimed that the past few months have seen massive monetary easing and rash fiscal spending, both of which he believes to be extremely risky. "We're in highly unexplored territory. Nobody's managed the level of money printing we're experiencing now for a very long time without running into some sort of difficulty. We're dangerously close to playing with fire," he warned. Munger commented on the recent rise in valuations of technology businesses by saying, "Think about what Apple is worth in comparison to John D. Rockefeller's empire. It has almost certainly been the most dramatic event in financial history worldwide." According to Munger, investors frequently become overconfident as they begin to taste success. Although some people may be incredibly intelligent, according to him, they misjudge their own intelligence and do worse than even the most naive individuals. Munger advised investors to attempt to avoid their own mental biases and keep things as basic and uncomplicated as possible. Munger says he simply tries to avoid being dumb when he is asked to describe his approach to investing. He claimed that he handles several issues in his own way. Since he occasionally encounters difficulties that are too difficult for him to overcome, Munger simply places them on the too hard pile and leaves them there rather than attempting to tackle them. According to Munger, investors should be aware of their areas of expertise if they wish to avoid making stupid mistakes. The bias of the human mind makes it difficult to pinpoint these locations, he claimed. Knowing where you're competent and where you're not is the single most crucial factor if you want to avoid making many stupid mistakes. The human mind naturally attempts to trick you into believing that you're far brighter than you actually are. So that is a complicated thing to do, he said. According to Munger, the quickest path to success for investors is to get on something that is trending upward since it will bring them there without much talent or effort. That concludes today's video. Thanks for watching it till the end and don't forget to give it a like and subscribe to our channel for more informational videos like this. We'll see you in the next one. Goodbye.